Let's turn to Luke Lloyd now for a look ahead and how you might want to position your portfolio heading into this new month. He's an investment strategist at Strategic Wealth Partners. Luke, good to see you. Thanks for joining us tonight.
Yeah, thank you. Thanks for having me.
What we saw in August was pretty much a continuation of what we'd seen in previous months, where defensive sectors were the outperformers as Wall Street just sort of rushes to the safety of those sectors, especially the bond market as well. What are your expectations? Do you see that trend continuing into September?
Right. So the whole month of August was a very volatile month, like you said. And there's a couple reasons for that. Trump's been tweeting a lot. Jay Powell had their meeting where he spoke, and the G7 summit. So really, we really expect the volatility to stay because, first of all, there's weak international data right now. And the U.S.-China trade war is still going on. And that being said, we think that's going to stick around as well. And I know U.S. elections are still about a year out, but at the same time, we still think with all that lingering around, there's still going to be volatility in the markets.
So I see you're saying get defensive here, utilities, REITs, those interest-sensitive sectors that have benefited from these record low interest rates. But at some point, when does that become what we would call a crowded trade and not as much safety? What do you think?
Well, I think we're actually pretty close to that. Utilities, REITs, staples, I mean, they're all very expensive from a valuation standpoint. People are trying to chase yield. What we're trying to do is actually position ourselves defensively in other sectors like tech. You know, for example, like we really like software over semis. Software provides recurring revenues, and they provide high margins, so they provide a lot of profit. So in regards to hardware, like semiconductors, they actually provide low margins, and they're all about productivity and producing. And we don't have producing in a recessionary scenario. It can typically provide some type of backdraw, and we really like software over semis.
Right.
So I mean, you have to really get defensive in other individual sectors, maybe other than REITs, staples, and utilities.
The Fed. Clearly, there's a debate going on, even among the bank presidents and the governors, about whether they should, in fact, cut rates. You had the former president of the New York Fed with that controversial op-ed piece this week saying they shouldn't cut rates, among others who've said the same thing. What are your expectations from the Fed, and what if they don't cut this time around?
So they actually have a meeting on September 18th, and we're really going to be eyeing that closely. The market right now is pricing 100% probability of at least a quarter of a percent cut in the interest rates. So that being said, we think the Federal Reserve is going to maintain in line with expectations because we really don't think they're going to over deliver or under deliver. So we really think they're going to maintain that posture and deliver what the market expects.
All right. Well, here we go. We'll see what happens. Luke Lloyd with Strategic Wealth Partners. Again, thanks for joining us tonight.
Thanks for having me.